Come on, man. Technicals. We are in the building, man. We are finally talking about technicals and getting on the chart work that I love to do. Play some Sean Paul. You gotta turn up, man. You gotta get excited for this, man. You gotta get really excited. Let's get it on to the early morning, man. We're gonna pause that and get to this video and get into this chart where you gotta get hyper, man. You gotta get hyper. We are on the charts, and this is where it all comes full circle. We're gonna talk about how I trade in 2022, and we're gonna get into candlesticks, moving averages, get into actual overall chart work. So without further ado, I'm gonna share my screen and not make you guys wait any longer. This is my screen. We're on GBP/AUD, which is my favorite pair. And what we're gonna do is, I didn't really even plan this because this is like my actual chart, but I guess I'll do it just because, like, as a trader, you can do whatever you want. I'm going to just remove. Let's remove everything. Let's remove the indicators as well. Let's start brand new and fresh. Let's look at some top-down analysis, but most importantly, breaking a currency pair down and breaking the market down. So, blank chart. This is a completely blank chart. Nothing is on here. And what would I do in this moment? A lot of people may be wondering that. So, for me, I will look at the weekly just to see overall like what's going on. And when I look at the weekly, I'm not looking way back here. This does absolutely nothing because you look over here, we're already back in 2016. Does absolutely nothing because over here, 2015, Trump wasn't president. Now Trump's president in November. Then there's a pandemic. You know what I mean? Like none of that matters on the weekly. What matters on the weekly is probably the last 12 weeks, which is like the last 3 months. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. About the last 12 weeks, last 3 months, that really matters. 1 quarter, which is why I have this 3-month thing up here, because the last 3 months you can kind of see like matter the most. You know what I mean? Like this is what's going on like overall from a 3-month perspective, because the quarter before that, which was January through April, January through April was this one. This is a new one. January through April, just head down. Like the pound was very, very weak compared to the Australian dollar. And now in the next 3 months, which is just April so far, because we're just in April, it's starting out right now. But I would look at it weekly just from that perspective, but from a daily is where I'll kind of like more, I still would draw things on a weekly and a daily. Like when I draw like my support and resistance, it's more so weekly, daily. But I'll do it on a weekly right now just because it's a lot easier to do so. I want to look at the number on the right and see where it's near. So it's at 1.76902. I'm actually refresh this. I didn't mean to do that. Yeah, I didn't mean to do that. So where are my key levels below and above it? And I still utilize the quarters there to a certain extent. If you go back and watch the Gold Academy, I kind of went away from it, but I kind of went back to it. Not like fully, like it's the only thing I do, but I do for the most part look at where the market is from a round number perspective, and then zoom in on that, and then look from a 4-hour, 2-hour perspective. So looking around, so I'll use the horizontal line right now. I may use array. Call it a day. Because a array, if I put it right here, it just stops right here, whereas a horizontal line goes all the way through. Let me just use a horizontal line just for now. And 170 is still a major area, still a major round number, so I will keep it there. I said horizontal. Oh, I did a horizontal array again. Excuse me, horizontal line. 170 is still a major area, and that is yellow for some reason. Let's. I'll keep it yellow first, just for a second, and draw the line around 170. As you see, this doji just missed that area, and every time, like you guys already know this already, but every time we say 170, it's the area around 170. So 170 could mean 169.900. It could mean 1.7200. Like that's just the area. It's not a specific number. So 170 right there. And then I want to draw another one at 175 still, just around numbers. And like I said, I've explained this in the archive and the Gold Academy overall as well. So you guys should be familiar with the quarters theory just in general. But again, I'm not basing all of my trades based off these levels. They're just small levels just so I can see what's going on in between these lines when I head down to so I don't like making the box super big or the area super big. So when I zoom in, I'm able to see exactly what's going on from that perspective, from a area perspective. So I'm on a daily, and then I will draw just a mid-level point just because. Still some of the same principles. Use this line again. 172.500. just in the middle. Yeah. I'm gonna make this not yellow. Let's make this blue for a second. Yeah. Let's make these black for a second. Perfect. Perfect. And usually you would write, like I would write if I just do this, I would write like I would write key area of support 1.70, or you could write monthly support, you could write weekly support, doesn't matter. Let me actually go back and actually write just monthly support. Even though I'm on a weekly time frame, this is a long-term perspective. Monthly support 1.70. And same right here, monthly support because price is above it, 1.75000. And this will be a weekly mid-level of support, 1.725. And I'm talking about just from what I would do left once my eyes are trained. And now we're gonna do the exact same thing. So I'm gonna get this line, get this, and put it at 175. Next one is 180, and now there we go. Now we're trading within this area right there. We have this, boom, boom, boom. $177,500. Cool. There's support. 177. And then 180. So just looking at where price can go and where I'm looking at, just an example. This may look a little cluttered, but I swear it's really not. Just from a perspective of what could it do as price broke through and then it stopped. It could not break below this weekly support area. Then it came right up, and then we're looking to see if it can break above here and then potentially break this 180 level, because 180 is very, very, very strong. Price didn't even get to that 170, but those round numbers of 170, 180, 192 flat, 160, those are very, very strong. So the first thing I would do, obviously, when I'm looking at a market is draw these areas on. But if you looked at my last chart when you started this video, they weren't on because I kind of know them in the back of my head. So I would like to have more space and stuff. I would just maybe delete this, and start using rays. Place it right here, because I already know where oil prices. I don't got to place it as a line overall. Just keep it right there. Make this lower. Make this lower, keep that here, and now since prices are already above there, I don't got to delete it, so I just keep these two areas right here. I kind of know what price is doing. Price is trading in between these two zones right now. So I have that right here, and now first of all we're gonna look at this area right here as one, because remember, if you look at over here, even though like it was placed right here, that mid level, let me actually place it back. Price is the same thing over and over again, so you can see in the past. Not only did it stop, this is 479, let me take the 500 a little bit. Yeah, so stopped right here. Not only did it stop right here, it stopped right here, and it stopped right here, just a little bit shy of it, but the same thing. Stopped right there, and that was it in terms of stop. Well, it stopped right here too, like the body didn't close below. So this was a area where you could have predicted price where to stop at in the past. You always want to look at the past and see what it did before. Even over here, when it stopped here, broke below here, but where did it go? It stopped at the very next area that it didn't break at, which is right here and right here. I just saw right here, stopped here, stopped here, stopped here. But whenever it breaks this area, it shows that it stops right here and stops right here and stops right here. If it were to break this area, where's the next place we'd probably think we'd stop at? Probably right here, because if you look right here, even though this is not like a major mid-level area, the mid-level area is more 167,500 over here. It stopped right here. It also stopped right here. It also stopped right here as well. So you want to look at the market for where it would stop in the past. But if we go over here, and then we can actually look at this from scale down on a daily and a 4-hour perspective. So from a daily time frame, instead of keeping this line down here, I probably will make it simpler and just draw the ellipse tool. Just to show this is a major area. Just keep that right there instead of a line. So I don't know, I'm just weird when it comes to like my vision. So if I see like a long line, I'm just, I don't know, weirded out, whatever. But I'm looking at it, and this is without indicators in general. But I'm looking at it from now we're looking at it from a candlestick point of view. What do we see here? We see price stop right here, make a lower high, come down, make a lower low, come up, match this high, made a higher low, now we're continuing up. So the first thing we may think of is we scale a little bit lower, we may be able to spot a nice trend line. Oops, sorry. There we go. And we can see how price may be able to abide by this trend line and stay focused on this trend line and go up as we're continuing on this upward journey to 1.80. But not only do we see that, we have these stop right here, stop right here, and stop right here, which is in inverted head and shoulders. Placing a ellipse tool right here, placing a ellipse tool right there. You always want to be on par with your actual candlesticks, and we don't have the candlestick stuff in this trading Bible, but we do have a Swaggy Academy book coming out. In terms of like the program and like an overview of it, if you want to see it in book form, and there's a lot of things of that nature, and then you'll be able to like look at it and see candlesticks just everywhere you go, as opposed to looking online and stuff or looking in your notes on wherever you drew it at. And that's very important to us because we think that'll help benefit you guys a lot if you guys can just open a book and see, oh, this is an evening star. Oh, this is like a list of patterns basically on top of everything else that we teach in here. So inverted head and shoulders, A, B, C, and obviously inverted head and shoulders mixed with this trend line bounce, the second trend line bounce, mixed with the ability of an actual reversal. If you look at the daily time frame, this is an actual reversal right here where price stopped at this 1.72500 level where it couldn't break below, and it showed us a reversal, and it came up, created a higher low, all the confluences you need to get in this trade. But if that's not enough for you, let's go down to the forward time frame. What do you have? You have a Fibonacci, A, B, which is right here before price came back down, C bounces off a little bit to 30.2 and 50 in the middle of that, and D, now we're looking, look at this candlestick right here. It's looking as possibly going to get above this 27 extension and make its way to the 61.8 extension. Those are 4 to 5 different confluences right there alone on why you should have gotten in right here. Could you have gotten in right here? No, because this is still a sell. Like, you're still thinking it's a sell. Could you have gotten in right here? No, because you're still thinking it's a sell. Like, you need an actual retracement. This actually matched this high, and this is actually giving you an actual bounce. And once you see 1, 2, 3 candles in the the opposite direction, then you can kind of look at this. Oh, this is an inverted head and shoulders. Oh, we can place a trend line here because it bounced right here. Oh, this is a reversal. Oh, let's get the Fibonacci out. Place the Fibonacci. Your entry could have been this candlestick right here, even this one right here, stop loss right below here, and you take this all the way up, even past this 1.8 to the 1.80 extension. And let me even do like a long position. If you would have gotten in right here, once you saw that, stop loss right here, take profit. If it's the 27 extension, 1 to 3, 61 is the 1 to 5, and 1.80 is the 1 to 7 risk reward ratio, which is why it's important to stay on par with your overall confluences and what's to come with this market. It's easy to break it down. And if that's not enough for you, look at the indicators, the 8 and the 14 EMA. You have the blue crossover to red, or the blue crossover to red right up here, which kind of indicated that, okay, we may be heading back up. Once you get down here and price is starting to reverse back up, blue crossover to red, same time as the candlestick burst right through, and the candlesticks are trading above the moving averages right now, which is very important because whenever, even if I place the black one on, just the 8 by itself, the candlestick should be above it. Whenever the candlesticks are above it, we're heading up. Just like if the candlesticks is below the moving average, we're heading down. And we see this candlestick looking like it's very, very big. If this 4 hour can close over the next hour and 40 minutes, how it is, it's looking like it's going to get a push up. But eventually we can expect, in my opinion, a push down to retest this trend line. Not only this trend line, we could potentially break this trend line and test this once it's support before heading back up. I've seen a lot of times where price may break a trend line and because it's so close to a support or resistance area and then touch it. And then most people may think, oh, it broke the trend line, now it's going to continue all the way down. No, not necessarily. In order for it to invalidate this trend, it would need to do a few things. One, need to break this trend line, retest and continue down and take that low out. Second, you have to literally take this support out and take this low out, BA. It has to take B out. Until it takes B out, it's still, it may not be a valid trend line, but it's still a valid trend. So this right here, excuse me. This red right here is very important. Sorry. This red right here is very important because until it takes this out, we are looking for buys only. And what the market may do, this is why I like swing trading overall, because the market may come down and some people may be like, oh, it's intraday. Like, this is about, this is, what is that? This is 77 and this is set. So this is about 120 pips. I'm like, oh, I can, on a 1 hour time frame, I can probably get 120 pips if I sell this down. Yeah, but it's not the overall move. So the price doesn't have to come to the trend line. It can come right here just a little bit, go up, now you lost, and then it can come down and we're still in a valid trend. Because counter trend trading is very, very dangerous because there's no guarantee that it's gonna go like all the way to where you think it's gonna go. The trend, for example, there's pretty much not a guarantee because nothing's a guarantee in this market, but it's pretty much you have all the probabilities in your favor that it's going to get to that next level of support or resistance, whatever direction you're trading in. But this is why I like swing trading, like I said, because once you get in right here, you can just hold it, let it get up. Once it come back down, great, you're still in it, and you just let it play out to what it wants to do. You're not in 30 different trades. You're in 1, 2, 3, 4, 5 trades, and you're just holding them and let price do what it do because your stop loss is right here. And if price wants to make this low, which swing traders love, because once it makes this low and it continues up, now our stop loss right here can be placed in profit because our entry would have been right here, and now we're in profit. So no matter what happens, if price wants to go all the way up or come down or all the way up or even take us out, it takes us out right here once we get this, and then price can head back up, and then obviously our stop loss would be now right here, which would be in profit from 174,670 to 175.7. So about 110 pips. We'd be stopped out 110 pips in profit, which is basically the same amount you would be if you tried to force this counter trend trade, just 120 pips. If you try to force it down with no guarantee it's going to go down. Whereas here, for the example where price here goes all the way up, and then it comes back down, and it'll stop you out from here to here, which is 120 pips in profit. That's a stop out. That's the worst case scenario. The best case scenario is it goes all the way to 61.8, and now you are looking at about 400 pips on this one trade. And that, my friend, is how you break a pair down in 17 minutes. I broke it down completely on what I would look at from top to bottom, top down analysis, and that is how I trade. And same thing with the other pairs as well. Like, I do the same thing, break it down from top to bottom, look at it, analyze it, and then just look at this pair. So if you're asking what I'm going to do in the future, like right now, I'm going to see how this just plays out. I don't care how high it goes. We all need a lower, a higher low. We get that higher low, we make and place another Fibonacci extension from A to, let's say it ends right here, right? B, look at the C level where, take this out right here, it would be 38.2, but the monthly support will line up with the 50 and 61.8. So either of these bring it to this pool of liquidity right here and then push up. And then once it does that first, second, or third candlestick it does, that is where I'm looking to enter. And that is where you got to be on par with your candlesticks. That first bullish engulfing or morning star, enter, because you have all the confluences you need to get in. So I hope this video helped you guys out a lot. I actually love this video. That Sean Paul in the beginning helped me out. Like, it got me right in my zone. You feel what I'm saying? So we don't need no hour technical analysis video, not at all. We just need just 20 minutes of studying, chart time, focusing, and then trying it yourself. So hope this video helped you guys out a lot, and I will see you guys in the next video. Let me know in the comments if this helped you out and how you've used it with your own trading. Gang. Come on, man. Let me get the mic up. Break up. It ain't a technical video. We not blasting Sean Paul and YC girl. Come on, man. Come on, man. You know what time it is? Come on, man. Let me stop. Let me chill before y'all get me in trouble, man. It's not a technical video if we not blasting Sean Paul beforehand. What's up, man? We did the breakdown for the first one to get you guys hyping in the mind space to look at the market and actually break it down from top to bottom. We are looking at AUD USD today, and I want to, it's crazy. I'm laughing because I go from hype to like, okay, guys, we are here to we are here gathered today for the, you know what I mean? Like, I sound crazy, but we having fun. We getting hype. Let's look at the market. Let me share my screen real quick. AUD, and the market is open this Sunday. It is going to drop. But from top to bottom, if I were to start from the beginning, because I want to give you guys some examples. If I were to do this clean chart, to show you guys like my thought process and see if it can help you guys with strategy. And this is gonna suck too, because I have a lot more writing on here, like in terms of zones than GBP AUD that I did in the last video. But it's okay. I know what I'm doing. The only issue is that like right here, I had this on since February and even January and October, just trend line. So if I were to remove the drawings and I'm trying to draw my zones, realistically, I know there's a trend line here and then price is breaking it. But if you're starting from scratch, you're gonna miss it. So that's why it's good to get on the charts and have a lot of chart work. You know, on top of the psychology part, we're talking about in terms of spotting, you know, what's going on. It's good to be it's good to be up to date with the market, up to date, because you get to and leave your drawing tools on, because you never know if it'll come back in a month or 2 months, even 3 months, to either break that zone or that area. Because if I were to do Command Z, sorry, there we go, then this trend line is here. But if I were to delete it, there's no, like, you wouldn't know to put a trend line from here to here. You just wouldn't know that. You know what I mean? But from here, you clearly would know. So neither here nor there. That's just the only thing. But other than that, let's get into this chart. Let me remove the drawings, and top to bottom, we're looking at it from this perspective of, you know, 0.70 is down here, 0.72 500 is up here, 0.75 is up here. First thing you want to do is map out the actual levels that come into play. We see this big wick right here, and you may wonder what happened here. On top of drawing zones, and this is what I said in the last zone video as well when it came to GBP AUD, like on top of the quarters and the round numbers, like I look in between each of them and draw my own, because based on where price actually physically stopped at, because sometimes the round numbers aren't enough. Sometimes you got to see exactly where price stopped at in the past. So we draw a rectangle from here to here. You can kind of see exactly why price stopped right there. Price stopped right there in terms of the wick. Like it couldn't break above it. It went above it, but it couldn't break above it. It did not close above. It actually stopped, gave us a quick fake out. People thought it was gonna buy. Sorry, stupid, you didn't wait for the candle to close on a weekly time frame. It closed all the way down here, and then we're pushing. The week is pushing way down here, and it's pushing all the way down. And we're gonna see how far it goes. I do think it could go 100 pips more down, but we're looking at it from a try this back some. Looking at it from a perspective of psych levels. Let's look at the horizontal array. Let's do a line. Let's go to 72 or no 75. Did I do a ray for GA or a line? I did a stupid line. I just don't like lines anymore. I like rays, but I'll just do a line just to have it long term. Let's look at 75 flat, which is a round number with a major key area. Because I don't even look at it right. Well, I can look at it right now, but it stopped here. It stopped right here where it didn't really close above. And if I go back in time, stop. I can keep going back in time for a point where it was over here. Hesitated over here, and this is from the beginning of time. This is 2006, so it's 0.75 is a major area for that round, for round numbers. What I'm going to do is draw another area from here to here. Price could not even break above the 0.75 area. Got above, closed below, and once you get a close below at a major support or a resistance area, you know it's going to head all the way back in the opposite direction. We got a major close here, and now we want to see in terms of 0.70 flat right here, where price gave us that double bottom right here. Here, you didn't even go as far as here. Just for now, just for visual references. Keep it here. Price stopped here, went up, stopped here, went up, stopped here, gave us that wick, and then it finally broke above. Came up, stopped, and now stopped again right here. And now we will get a mid-level right here, horizontal array. Let's do 72.5. Even though in the past, you can see where my cursor is, my line. Price stopped right here and right here as well for 72.5. But I just got the ray on right now. And I don't feel like drawing or writing the names. Let me actually take this indicator off really quick. I don't feel like drawing the actual the text like weekly and monthly. I just keep it as this. But I would usually do that. And I'm gonna change this color to make it look a little different than my monthly ones. Let's do a gray daily. I said this is a gray daily level. Duh. Let's do. Oh, we do a yellow border. That would be a yellow border. Keep that there. And then if I were to get another yellow border or something along the lines, probably around right here, because price hesitated here before finally breaking through. You can even see it over here as well. So all I'm doing right now is spotting areas where price stopped at in the past, getting a little strip. So we want to be as mindful as possible, because if price is going to stop here, we want to be alerted with what price is actually doing. If I look at a daily time frame, I can look back and see that there was a trend line here from A to B right here. And we can see prices approaching that right at this line right here. So there's a confluence right here on what price can actually do. Boom, 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 right there. And we are looking for price to break this area only because of the major pause right here. You may not see it on the daily time frame, but on the weekly time frame, you can see price refuse to break above this area and is going to head all the way back down. So I'm looking for price to head down, probably to this area, come up, retrace, and then pull all the way back down to this 0.70 area again. Maybe a little bit higher, probably 0.71, 700, this area right here, because that deserves a, you can see it from over here, but I'm not going to draw it that far, just from over here. Deserves a little bit of respect in terms of the actual wick. So where price could actually stop at 0.7335, 0.71. So about 140 pips, and that separates these two. And then you have the mid level right here. So the AUD we have some marks and some points on what could actually happen with this. But the first thing we want to do is measure and get all the confluences as possible. We have this on a weekly time frame. Now intraday wise, what could happen? We're looking at this trend line and we're seeing what's going on. The price can actually break this trend line. We're looking for it to not only break this mid level, but take B out and take A out. And that is what we have in. If you look at this video in my courses section on the actual academy, and go to the actual Gold Academy, and you go to Foundation on How I Personally Trade, and there's a video of trend line video, breaking trend lines right here. I talk about it in depth on what happened. We have a breakdown right here on like our notes right here. We have it all set out for you. But we also have our related terms right here, A, B, C, D, boom, 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 boom. So it's all right here set for you guys. What else? Yeah, so when price, we're looking for a price to break this area for C, head all the way down to B, and then potentially head all the way down to A for AUD/USD, which you obviously will adjust and change as the markets change. So keep that in your mind. But we're breaking down AUD/USD, and what I also would do is I would try to have it side by side, and potentially I wouldn't have this on a daily. I have this on a 4-hour. Actually, no, it'll probably be a daily and a. I'm looking for a long-term perspective of it. This looks ugly. This should be a swag chart. Yeah, swag chart. Unfortunately, I didn't mirror this on beforehand, because it would have mirrored out if I would have did it at the same time. Like right now, if I were to, where's it at? Where's this at? First of all, let me take this off real quick. What time frame is this on? It's a 1 hour. So if I go to 4 hour, oh, it did mirror. I know this is a while ago. Remember, I did that for a webinar. It's a different chart with drawings. Yeah, so now I'm right here, which is over here. So if I were to draw this, that should replicate on this. Am I even on AUD? It's GA. I'm about to say, am I even on AU? Jesus Christ. Thank you, right here. Yeah, so different AU. Move drawing. So now if I delete this, now if I draw it back on, it should replicate. Is it replicating? It's not replicating. Here we go. I don't know why it's doing that. This is messing up because more times than not, it does this. It glitches sometimes, but when you keep it on drawing mode, it'll literally replicate on this side, and it's not doing that right now. But it's all good. Oof, didn't mean to do that. But yeah, some more time I'll have it side by side so we can see what's going on a daily time frame, 4 hour time frame, and see what's going on a 2 hour time frame for potential entry. I see this dropping and dropping, but if this were to, let's say for instance, if this were to head up, right, and head up, and we can look at it. You can't even see it over here if I was to draw it, but you can see my cursor, which is right there. Head up, and then we get another area potentially where it were to head back down. You see my cursor. You can see it on this end at the exact same time on a 2 hour, 1 hour time frame, which is why it's very important to try to have them side by side. Sometimes even go as far as to having it 4. And I would have to obviously change my charts and change the screen. But what I would usually do is have the daily here, the 4 hour here, 2 hour here, and even the 15 minute here. And that's sometimes when I'm trying to really get like a great entry and kind of scale it back in. But right now with the 2 hour time frame and 2 hour, just the two side by side is good enough. Let me actually get some water really quick. All right. So yeah. So that is with AUD USD, and that's breaking down from the beginning. This is all you have to do. All you got to do really. You don't even got to do it every week because your drawings will stay on. But in terms of keeping your mind sharp and making sure that things look the same and you still got it if you were to strip it clean, you should be good. And now in the future, all you gotta do when I talk about 30 minutes or less, all you gotta do is look at this chart and see what's going on. Is it breaking this trend line? Yes, okay, trade. If it's retracing, okay, leave it alone. Set an alert, which I talk about in this academy as well. Set an alert. So these are the videos that I have so far for you guys. And it's probably gonna be a lot more videos than this. No, it's probably gonna be because we have this with the Gold Academy, but we're adding more and more. But obviously, you guys can see this because you guys will see this in the academy already as it is. These are the videos we're thinking about having in order. Right now, I am breaking the market down, making sure you guys are good and up to date, up to speed. What else is there? So I was saying is to keep your mind always sharp and always on point. If everything was to get away from you, and you want to make sure that you check to see what the EMAs are doing. EMAs are down on the daily time frame, 4 hour. They're down. Like it wouldn't be on the weekly probably. Like it takes its time because weekly takes so long. But the daily 4 hour and the 2 hour, all the EMAs are pointing down to what you should be doing. Trading down. You just can't get in right now because your stop loss has to be right here, the last lower high. But price is giving you lower highs and lower lows. You look at it from even a 4 hour point of view and just look at it. There's no real Fibonacci play here, I don't think. Maybe not. Yeah, so barely the 38.2, not really, but you can see it getting lower and lower and lower. But you got to look at the market for what it is. Oh, excuse me, jeez. You got to look at the market for what it is right now, which is just heading down and the overall trend. If I can do this and indicators. Let's look at line chart and see what's actually going on. Yeah, just from a structural standpoint, the market is just heading down, up, then down, then up, then down. This could have been considered a double top right here. You strip the candlesticks off. Then you see that price heads up and down, and then it finally takes this out. So that double top is no longer valid. Let's look at Heikin-Ashi candles really quick. Yeah, and you can see that the market is heading down, 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 down. I love Heikin-Ashi candles because you can actually see the overall trend of what's going on. Because what Heikin-Ashi won't do is give you a red one day, green the next day, red the next day, green the next day, red the next day, green the next day. It takes the overall of what's going on and it shows you, okay, this is heading down, this is heading up. So if let's say for instance, if one day is heading like all the way down and you get a small green day and another red, then another red, and a small green, another red, it'll just show 7 reds because that's basically what the trend is, as opposed to what candlesticks will show you where it's like red, green, red, green, red, green, red, green, red, green, and it's just like that may confuse you. Whereas Heikin-Ashi is just like, nope, pure red, a little bit of green, red, and it's not like every other candle. So I may have to do a Heikin-Ashi course one day because I don't know, Heikin-Ashi candlesticks makes it so much easier to trade for me, in my opinion. Because look at all this. This is all green, just tells you to keep trading up. But if you look at it from a candle perspective, I'm pretty positive that's not all green if I were to look at it. Exactly, you got a black one right here and a black one right here, which is obviously, so green, aka would be purple, because that's up, and black would be down. And if you look at this right here on a Heikin-Ashi, this is all red, whereas on a candlestick, purple. So if you see this and it's going down and it comes back up, you may think, oh, the market is going against me. And this is the reason why I talk about having black charts in the archive course and even the Gold Academy. It's like you want to take away as many emotions as possible. And with Heikin-Ashi candles, it actually does that. So maybe in the future I'll make a bunch of videos on Heikin-Ashi, how to read them, how to trade them, and it's basically essentially the same thing as candlesticks, except it helps take out the clutter. Because you can actually see what the market for is worth. At the very least, you'll see like 2 in a row, 1, 2. You won't see green, red, green, red, green, red, because that'll confuse you too much. You know what I mean? So, but I hope this video helped you guys out a lot in terms of AUD/USD and what it could actually do. If I go to a weekly time frame and put the original trend line that was on, I don't know where it was even at. Hit it here, assuming. Yeah, it was there. Just so I remember in my own trading what's going on with it, and it's probably breaking this area right here. We're looking for it to head here, here, here. That's the good part about swing trading, is that when you're swing trading, you have these positions, whether it's 1 or 5 or 6, and you're just holding them. At each point, you just take profit, take profit, take profit, or take partial profit, take partial profit, take partial profit, as opposed to trying to get a stop, you enter right here, and your take profits right here, your stop loss is so close because price can easily retrace and stop you out and then come all the way back down. A swing trader don't got to worry about that, because let the market fluctuate. It's going to hit the take profit eventually, either the big take profit eventually, or the small, or the big small, not small, stop loss. Sorry, I'm all cluttered right now. I'm making videos all day. Stop loss that you have set, when it's so close, it gives you no room to breathe, and that's the one thing you need in this market. Area to breathe. So another 17-minute video with AUD/USD, just breaking the market down and kind of looking at it for what it's worth. That is how I trade in 2022. That is updated from the actual Gold Academy and what we have going on in there. Like I said, to-do list is to really just, there we go. To-do list is really just get shit done. That's all we're here to do. Just get shit done. So I hope you guys enjoyed that video, and I will see you guys in the next one. And most importantly, make sure you pay attention to Lucas's technicals, because I kind of let him take the reins with the technicals in this particular one, because you guys haven't seen technicals from his perspective, but he's a price action trader just like I am. And you guys have a lot of my technicals in the Gold Academy and the archive, so I just added a few more in here. But I wanted to really shine the light on him and KJ, because more so Lucas in terms of price action. KJ is institutional, but Lucas in terms of price action, because it's kind of the same as me, but he offers a different viewpoint from the same perspective, which is from a different perspective, but kind of like the same ideology. So I hope that helped you guys out a lot, and I will see you guys in the next video. Come on, man. You know what time it is. Another technical video. Another technical analysis video. It is 3:20 in the morning. Trying to stay awake, trying to knock these out for you guys, and you feel me? I'm hyped right now. I'm a little tired, but I gotta play basketball in an hour and 40 minutes. I gotta fight MMA in 2 hours, so we're gonna get right into this, man. You know when you hear the Sean de Paul, it's time to rock out. So that's my 30-second intro. Let's get right to it. Shared screen. GBP, USD. I did GA, I did AU, and now we're gonna break down GBP, USD as well. And again, I love how my chart looks, but it's really, really easy to click, remove drawing, remove the indicators, and start from scratch, because you do it so many times as the years go on. Your brain gets used to the charts. Your brain gets used to, figuring out patterns and remembering your zones and your key areas, support, resistance, and to just all the things that make the charts the charts. Your mind gets used to it. So it's really easy to plot it on. And the reason why I'm doing this in this academy is because I did top-down analysis in here, and in the archive as well, but specifically in here as well. But I don't think I did to this extent. And here I was talking about like psychological levels and the trend line, then my actual strategy, and then candlestick, and then sniper entries, all of which were good. But then market structure and my strategy top to bottom, put it all together. I think this is more so a top-down analysis on like what to look for and how to look for it. So again, as usual, we are really close to this 1.30 area, if not right on it, which is why price is hesitating right now, because that is a major area for GBP USD. You can put this right here. I will probably use the gray daily level right now. And I'm going to put one below and above it just because price could break below, but also price could get come back up. I like to put places within zones. Actually, just copy this instead of creating one. Got two nice areas right here, two key areas right here. 135, 130. Just make it smaller just because I just want to. And then we have our mid level, which should be 1.325 on here. Got our mid level right there, and we see what price is doing overall for GBP USD. We have a long-term trend line that I can spot from here to here, which shows that price is in a downtrend. You can also go from here to here and completely skip these if you're looking from it from a super long perspective. You know what's coming. You could also do, excuse me. You could also do a trend line from here to here. I actually keep that one on over the first one that I drew. Looks better, feels better. A, B, C, D. A little bit missed it for the E bounce, but then price just drops all the way back down. So if price were to come and retrace up, we would anticipate it getting all the way to this trend line before breaking. But if price was to get all the way up there and head up over 200, 300 pips, I would expect it to make some higher lows and break this and try to take, you know, D, C, B, and A out. But right now, let's look below as well and see where it's going to. And now we have an area below this 1.27 area. Right here, this 1.275 area, which is essentially the mid-level. Not essentially, it is the mid-level. And you see price just stop. I'm not going to draw a zone where you see price morning star right on the area. Stopped right there. Stopped just short of it a little bit right there. Stopped right here. Stopped right here. And it stopped right here. So if price were to get below here, we would anticipate GBP USD getting to this level right here. It's imperative to, you know, focus in on what the market is actually doing, what they're talking about on a day-to-day basis, and what it did in the past. So right now we have this double bottom right here, which signifies that price could come up, but I would not be anticipating any type of real life reversal until price takes this level out. I'll make this yellow. Until price takes this level out, because price can easily come back up here, make a double top, and then come right back down. I need price to completely clear this level, come above it, come down and retest this level, and then start to head back up, give us some kind of candlestick that we can focus on before heading back up. We take a look at the EMAs, and price is heading down on every EMA you see. The EMAs are down. So in that scenario, you would only look for sells, and we would only anticipate GBP USD getting lower and getting lower to this 1.27500 area. But GU has dropped for a long amount of time, and it's actually consolidating. Even though this is 1, 2, 3, 4, 5, 6, and it looks kind of weird, I would still consider this consolidation because there's no true lower highs, lower lows, higher lows. I would consider this right here consolidation. Oh, excuse me, guys. I would consider that consolidation. This may be my last video for the night, if I'm yawning like that. But from here on out, what I would do right now is just literally just wait to see what the market wants to do. Because if price wants to just drop, then it's unfortunate because our stop loss would have to be way up here, and I wouldn't feel like a good enough entry. I feel like we can get a better entry, which is price could either head up and retrace and then come back down, get my entry right here, or break below, retest, come back down. I can circle that and get my entry right there and head down to this 1.27500 level. And that is GBP USD. And we would obviously need price to, if I can stay on drawing mode for a second. In order to invalidate trend lines, stay right here and stay right there. And about right here, even here. Just levels in case we needed to break any of these. Like if we need to break and price, just so you guys can pay attention in the future. If price were to break this resistance and break this trend line, Our first take profit would be here, and then here, and then here. It's about 100 pips away from about 90 to 100 pips away from each other, and it's all synonymous with each other. If you guys haven't seen, I made a video that said Forex is art, changed my mind, which is, I think I changed it to this right here. If you look at the Forex is art, changed my mind video, this right here, this is such a good video. Is this it? This is a good video, but I don't think this is it though. Maybe this one. No, that's GU again. I don't know. There's a video I literally just created. It was about gold, and it was called Forex is art, essentially. I mean, maybe this one. I don't think it's this one. Sorry, I'm trying to make sure I find it. Yes, this one. Okay. Wow, the last one that I should have been on the first one. It's one of the most recent videos. This video, I broke it down where I talked about the levels of gold and the levels of GBP USD and why it's important to measure the distance from one location to the next and then cloning it and making it above. So it's the same with here, where the distance is more or less the same. Maybe it may be like a few pips off, but if I were to measure from here to here, it may just be a few pips off in a few of them, but for the most part, it's kind of saying the exact same distance. The exact same distance. And this may be a little bit short, which it is. I'll bring it up to the end of the wick, still a little short. But it shows that prices here came all the way down. The lower high came all the way down, was 90 pips, came all the way up. Then lower high, 90 pips again, came all the way down, came up again. A little bit close to 90 pips, maybe more like 99, 100 pips, came down. It's a little bit more, of course, but it's the same thing in terms of the overall art structure of the market. And it's up to you to see those key elements like that and remember them, so you can have that in the future where it's like a price comes down and comes back up. You know that when it drops, it's going to drop about, what, 90 pips because of what it's used to. If it gives you more than that, great, but that would be a take profit area. Look at Heikin-Ashi candles. Heikin-Ashi candles are all pointing to the market heading down to this 1.27500 area. So I'm excited to see how it will play out. But that is my bias for GU right now, is that price should be heading down. If it does head up, then I'm looking for a higher low and then a continuation up with the crossover of the EMAs, and price can continue up all the way to this trend line and continue to break DC, BNA. And that would probably be the last breakdown of a market for you guys in terms of technical analysis, because I really just wanted you guys to see the overall structure of certain things and how to look at the market, how to try to break it down. And then when you make a trade, the trade is based off of that. So I hope you guys appreciate that video. And that was like a little 3-part series of breaking the market down from GA to AU to now GU. And then all you do in those situations is just wait. All you do is just wait to see what the market wants to do, how it wants to do it, and if it want to give you that downtrend or uptrend. One thing I haven't done in this video was set alerts, but I've done that in the Gold Academy, so if you want to learn about that, then do it. That is the biggest element to the 30 minutes or less rule in terms of coming, because like this is 10 minutes. It's you go and you analyze the market, you see what trades you can make. If you can't make a trade, you place an alert so that if the market does what you think it's going to do, because like when you come to the market, you're going to have an overall bias of the market. And the alert is for when the market does exactly what you think it's going to do, but you're not by your chart, you will get alerted. And so that's the biggest thing to trading, whether it's signals, intraday trading, or day trade, doesn't matter. If you're not on your charts and you're not on your phone, nowhere near it, please set an alert before you go so that you can always be up to date with what's going on in the market. Other than that, I'll see you guys in the next video.